Got some breaking news now. The dollar is down 10% since the start of 2025. A $150 billion Swedish pension fund just announced they're reducing U.S. bond holdings due to reduced predictability. Foreign investors are piling into hedged ETFs and snubbing unhedged ones. And here is the kicker. Bitcoin, the asset everyone said would replace gold as the ultimate safe haven, just crashed from 126,000 to 78,000, while gold is hitting record highs. JP Morgan's year-end target, $6,300 an ounce gold. Silver nearly tripled in a year. Central banks, they bought over 1,100 tons of gold in 2025 alone. So what's really happening? Why is the smart money abandoning both dollars and Bitcoin for physical metals? Well, Josh Ward from Noble Gold is here to break it all down. He has been Noble Gold's top salesperson 4 years running. Personally owns more gold and silver than almost anyone I know. Josh, the rotation is accelerating. Walk us through what you are seeing, and welcome to the Next News Network.
Thank you, Gary. Thanks for having me on here. Yeah, it's an exciting time. I mean, what we're basically seeing is the smart money getting out of crypto, getting out of the U.S. dollar denominated assets and into physical gold and silver. And I want to make that distinction here, Gary, right? Physical gold and silver. They're rejecting the ETFs. They don't want paper certificates. They want the actual real deal, the real McCoy, right? Real physical gold and silver.
So gold is, we've been tracking it here with you guys as well. It's just making record numbers. A little bit of pullback, but then a little bit of a bounce. The dollar's down 10% since 2025. Like I mentioned, $150 billion Swedish pension fund reducing U.S. bond exposure in several tranches, citing the reduced predictability. Foreign-owned U.S. government debt dropped from 38% of portfolio investment to 13%. Lowest in history. What is happening, and why should Americans care?
Yeah, well, it's the writing's on the wall here, right? Everybody's scrambling to get out of their dollar-denominated assets, whether it's treasuries or stocks or whatever it may be. I mean, people don't want to be left holding the bag. They're seeing the writing on the wall, the decline in the dollar. Everybody's reducing their exposure, and they don't want to be left holding the bag. It's as simple as that here, Gary.
Well, treasuries are supposed to be a safe haven. After the April tariff announcements, yields went up, even as stocks crashed. The opposite of normal, really. One analyst said hard for treasuries to be safe havens when American government is self-driving turmoil. Is the traditional flight to safety trade broken?
I think so. I mean, it's real tough to convince investors to clip coupons at 4 or 5% when silver's up 300% in a year and gold's up 75% in 2025, right? So it's real tough to convince those individuals to buy treasuries when they're looking in the market and they're saying that other safe havens, the real safe havens like gold and silver, are growing exponentially in the same time frame. So I know I wouldn't want to be clipping coupons at 4 or 5% and getting paid by the U.S. government. I mean, that's the last line that I would be in, Gary.
So central banks have been buying over 1,100 tons of gold annually. Poland, they just bought 150 tons. China, of course, a massive buyer. Foreign effects reserves in dollars dropped from 72% in 99 to 57% today. So what are we watching here? The de-dollarization happen in real time?
Yeah, right in front of our eyes. And I think that's a big reason why we've seen silver up 300% in the last year, and we've seen gold up, almost 100%. I mean, I remember pretty much a year ago to the day, silver was $30 and gold was under 2,000.
Yeah, no, it's remarkable to watch the meteoric rise of silver, something I never personally anticipated. I know I've talked to Colin about this. He's been predicting this for a very long time. And JP Morgan, they just put out a year-end gold target. As we can see here, just 48 hours ago, we have this. There was 14,000 posts on X, gold reclaiming 5,000, silver topping $84 amid volatility, spot gold reclaiming 5,000, rebounding from the dip last week. But we have this, JP Morgan says $6,300 an ounce. Deutsche Bank predicting 6,000. And as you just mentioned, we've been talking about silver went from 30 to almost 90 in a year. Goldman Sachs explicitly recommending to like safe assets such as gold. So what's driving these calls, and are they actually realistic?
Well, I mean, to all these hedge funds and companies out there, I say welcome. Right, the water's warm. We've been here for a long time. We've been on the right side of this trade for a long time, and there's no surprise to me that we've seen silver do what it's done here. Right. I mean, the only surprise I would say is that it happened so quickly. Right. I mean, the 300 or $30 to 90 happened almost overnight. I mean, last year silver had 9 or 10 consecutive months in a row positive, which is the first time since I can remember that that's ever happened. So I really think it is a flight to safety, a flight to hard assets, a flight to real money, and I think it's gonna continue. And in fact, I think those estimates are very conservative on gold for the end of the year here.
Oh, conservative. You think they're
No, absolutely.
conservative?
Absolutely. Yeah. I mean, it's banks are usually pretty conservative in their predictions. I think those are very conservative. I think there's a good chance we see between 7 and 8,000 by the end of the year.
Well, what would that mean for investors right now? I mean,
Well,
what's gold sitting at right now today?
gold is right around $5,000 an ounce right now. It just overtook $5,000 an ounce. It went up to about 5,500. Silver went up to about 120. And then we've seen the recent pullback, right? I mean, silver was up almost 100% in the month of January alone. So there's no surprise to me that we saw a little bit of a pullback here.
What
And
caused the
again,
pullback? Because I was
well,
watching it, I'm going, this is interesting. I personally, I've always seen gold just keep going up and up and up, and I recognize. Correct me if I'm wrong here. I've recognized the staggering rise of gold, staggering rise of silver in the last several months, last year really. And I just recognize, okay, well, we got Bitcoin that's taking a hit too. Maybe gold's just kind of following that as well, and gold's trying to find a new floor. But then of course it bounces back. What is happening? What's causing this?
well, we saw record numbers of banks, including J.P. Morgan, getting out of their short positions at the bottom of the crash here, right? I'm sure a
Okay,
lot of you. So I think it was a coordinated effort to bring the price down. I mean, basically, all of the silver that's mined in the entire year was sold in a day, paper contracts, and
my
that
God.
brought the price down like crazy, as you can imagine. And I think that is temporary, right? I think these banks were in a lot of trouble, and I think it was a coordinated effort to bring the price down to get out of their short positions.
Interesting, because they were exposed on their shorts, so then they go ahead and manufacture the dip, so
and
they
get
can make up for it. Of course, we're
and then
talking
go
about
long.
the biggest globalist banksters in the world. Of course, they have the means to do so, but no, of course, no one's going to investigate them, right? They're
No,
not going to be sitting in front of the securities committee answering to that. But let's go back to the silver. The fundamentals staggering. 6 straight years of consumption, exceeding production by 102 million ounces. Above ground stocks depleted. After the pullback, ETFs added 29 million ounces. Second, third largest ever. Singapore investors lining up to buy. COMEX getting drained. Is
yeah,
this a silver squeeze everyone's waiting for?
absolutely. I mean, it's we're seeing the price a lot higher in Asia for the same ounce of silver than it is in America. So if I was a producer of silver, if I was manufacturing silver, where would I be shipping that silver to? Right, I would be shipping it to Asia before I shipped it to America. And I think that goes part and part with the physical demand for silver. So people are rejecting certificates, people are rejecting ETFs, people want the physical metals. And the physical metals are in extremely short supply here, Gary, right? So I kind of have my nose to the grindstone here, so to speak, and we buy unbelievable quantities of silver every month for our clients. And we're finding it harder and harder to find metals, to source the metals, to have them available to sell. The premiums are starting to go back up. So as we saw in the last 6 months, the premiums came down on silver because the price was exploding so much. And now it's kind of leveled out, and now we're starting to see the premiums take off, especially with the American Silver Eagles, right? The U.S. Mint came out, oh, it was a couple weeks ago, I think it was, and stopped producing the American Silver Eagles. They ran out of silver, right? They on their website when silver took off, they were $90 on their website, and the spot price was over 100. And the lucky few individuals that were able to get in there and buy it under the spot price, well, that they put a close to that real quick, right? So they repriced the American Silver Eagles on their website. They doubled the price. It went from 90 to $180 overnight. They just repriced on their website. So
No
this
kidding.
is very telling. And these refineries, these places are having a hell of a time getting the silver because most of it's going to other countries where they're paying a lot higher of a premium for it. for the physical metals.
So you guys are still able to access it. I'm sure it's just not, it's not easy.
Yeah, no, absolutely. And we're having, I mean, we thankfully we have very good um wholesalers that we buy from. We have directly from the mints. We have contracts. I mean, we have physical delivered to our distribution center every single month. So, we still have tons of silver available, but I'm hearing from reports all over the country of, little smaller mom and pop stores. They're not buying silver. They can't sell it. Other companies out there are not buying. I mean, we're really starting to see things kind of shake out here, and it's interesting to see it because I've been in this business for a long time and I've never seen anything like it.
It's amazing. It's exciting time to be alive, and of course, with those projections by J.P. Morgan, you say that they're conservative projections. I think if there's, there's always regret when you, hey, I had Bitcoin at $200, and
Yeah.
now Bitcoin's 70 something, whatever. I mean, I remember looking at Bitcoin when it was literally parity, dollar to dollar,
Yep.
yeah, and wondering how I could get into it, and that was a long time ago. So, with respect to where gold is now, you've got a good dip, you've got some good projections. So this would be a perfect opportunity right now for people to flip their 401ks or IRAs into gold, and that's what you guys specialize in. But I do want to talk about the Bitcoin failure as a safe haven. I mean,
Yeah.
I was doing some research into Bitcoin. I'm like, what's causing this dip? Why are we seeing this massive crash in Bitcoin? Because I remember when Bitcoin crashed the last time, it went down to, I think, 30 or 15. I mean, I remember I cashed out at around 30 because I got nervous, which was really a stupid move. And then Bitcoin soared. So like I'm looking at it, I'm going, this has just got to be one of those cyclical moments with Bitcoin. But people always called it the digital gold, right? It hit 126,000. They said it was the new safe haven. Now it's at 78,000, down 38%. CNBC analysts saying Bitcoin is much more correlated to stocks, not emerging as a store of value. Is that true? I mean, is that true? Is what we're seeing cyclical? I mean, is the rotation out of crypto into traditional rails like gold the way to go? And what happened to this digital gold thesis?
Yeah, so I think it's digital fool's gold. Okay,
Mm,
I am not big on Bitcoin at all. I think in fact part of the reason why it took so long for metals to take off is because of that money was flowing into cryptocurrencies instead of gold and silver. So historically, if Bitcoin wasn't around, I think we'd see gold over 10,000 and silver over $300 today.
really?
Right? If that wasn't an option, I think so. And I think a lot of that money is rotating, right? Imagine this: a lot of people didn't want to hold the US dollar, right? So a lot of people saw that they had two choices, two horses in their mind for the race, right? They had Bitcoin and they had gold and silver. And I think a lot of people bet on the wrong horse,
Mm.
and they're seeing that now, right? They bet on Bitcoin as a flight to safety, quote, safety, and they lost 40-50% of their money, right? So
Well, I mean,
uh
I'm looking at this chart here, and you could probably see it as well. This is the cyclical chart of Bitcoin, which appears to be, following the same patterns as we've seen before. Does Noble Gold offer any opportunity into a Bitcoin investment if people want to buy this dip?
Yes. So our owner, Colin Plume, has a sister company, My Digital Money, that works with cryptocurrencies for an IRA. So you absolutely can. But at Noble Gold, we used to back in the day. I was here during that when we did crypto and we did gold and silver. This was 2018, 2019, and it kind of became too much to do both.
Mm,
So we kind of split it up into two different companies. And so now, Noble Gold doesn't have any involvement in it, but there's a sister company that is involved.
interesting. Okay, so there's a fascinating argument that Wall Street broke Bitcoin's scarcity. Cash settled futures, perpetual swaps,
Mhm.
options, ETFs, prime broker lending. One Bitcoin can now back six different claims
Yeah.
simultaneously. That's kind of scary. Critics call it theoretically infinite synthetic supply. They say that
Yep.
21 million hard cap is that thesis is dead. Is Bitcoin facing the same paper market manipulation gold and silver have dealt with for decades?
I believe so. Yes. I mean, I would probably take it a step further here. I think that Bitcoin it has a long way to go down. I mean, I think a lot of people, I don't know, a lot of people aren't really talking about this, but Bitcoin was mentioned in the Epstein files. And I read all about it. And it was basically, Jeffrey Epstein was somehow involved in the white papers or in getting it set up and funded very early on. And I think people are realizing that they put their trust and then they bet on the wrong horse. So, I don't think Bitcoin is a store of wealth. I don't think Bitcoin really is much of anything. I think the only reason why people buy Bitcoin is because they think there's someone that's stupider later on to buy it from them at a higher price, personally.
Well, I mean, obviously it makes sense if you can hold it and you can mold it,
Yeah.
then it's
But
real. It's
but
real, and
but
that's
but
where
look what the
gold and
government's
silver come in.
doing.
What's that?
The government, I think, is ruining Bitcoin. Okay, so the whole point of owning Bitcoin when it came out was the decentralization of it, right? The government's not involved. Nobody knows that you have it. Nobody knows where it's sent. Nobody knows what you have, right? And all of that is gone. The government knows where everybody's crypto account is, where it's there's a ledger that keeps detailed tracks of everything for every crypto transaction. So the U.S. government can narrow it down and track that down to any individual, right? When you own physical gold and silver, you're taking cash that you have out of the finance sector, out of the banking sector, and you're putting it into a physical, tangible item that you hold on hand. The government doesn't know that you have it. They don't know how much you have. They don't know what you bought it at. They don't know what you did with it. So for me, that's true wealth protection. Holding a coin that you don't need to produce anything or make anything. In fact, it costs tons of money just to have it isn't a store of wealth in my mind.
So, Josh, for people watching who have retirement savings in dollar-denominated assets, maybe some crypto, seeing all of this unfold right now, what's the move? Now, you
Yeah.
personally own significant gold and silver. How do they protect themselves with physical metals, and what should they know about getting started with Noble Gold?
Yes. Well, here at Noble Gold, we are a little different than a lot of the other companies out there. I mean, we like to educate our clients. We like to go over all their different avenues, kind of lay out the cards on the table for them. And if it seems like a great fit, perfect. If not, at least you were able to get some information and make an informed decision on your own. So we're not here to sell high price semi numismatic coins at crazy premiums. That's not how we operate, right? I mean, all of our clients have gotten filthy rich, is the truth of it, right? I mean, I talk to people every single day that are calling me that bought gold at $1,500, $2,000, bought silver at $15, $20. And now they have millions of dollars in their account in a short period of time, right? And that's real money. So I think if you're on the fence or if you've been thinking about it or if you're holding dollar denominated assets, I think this is your kind of writing on the wall. This is if I had a gavel, I'd slam it down on my desk here. I mean, this is it. We're going through a currency change. We're going through a kind of a complete financial change in this economy, in this system. And gold and silver have been used as money for thousands of years, and that's not going to change. Right? When you think of money, it needs to be something that the government can't print out of thin air. That from 1776 to 1933, the government had to mine, refine, assay, and mint all of the silver coins and gold coins. Now the government just goes on a computer. Here, oh, here's $1 trillion. I wonder how this is going to wreck the economy in a year or two from now. But you know what? I'm not going to be in here. I'm a politician that's only going to that's serving my 4 years, and then I'm out of here. So it's I think it's terrible. I think we need to go back to our roots. I think we need to go back to what works, what's worked in the past. I mean, every fiat currency that has ever existed since the beginning of time has gone to zero, to nothing. And I think there's no different with the U.S. dollar here. I mean, we've since 1971 we've been on a pure fiat currency, and the average lifespan of any currency is about 65 years. So I think the dollar is on its last leg, and I think the 10% decline that we saw last year is going to be nothing to what we're going to see in the next 2 to 3 years to come, especially with the new Fed chairman.
All right, Josh, thank you so much for joining us.
Yeah,
Patriots,
Gary.
let me break it all down we just heard. The dollar is down 10%. A $150 billion pension fund is fleeing U.S. bonds. Central banks are dumping dollars and buying gold. Over 1,100 tons last year alone. J.P. Morgan says $6,300 gold. Deutsche Bank says $6,000. You've seen it. We've covered it here. Silver nearly tripling in a year. Bitcoin, the asset everyone said would replace gold, crashed 38% from its highs. while gold is hitting records, and I'll personally think that it is cyclical. But Wall Street did create derivatives, an infinite synthetic Bitcoin supply, the 21 million hard cap, broken by paper markets, the same manipulation that they've used on gold and silver for decades now. The smart money sees it, foreign investors see it, central bank sees it, Josh Ward sees it, and that's why he personally owns more gold and silver than almost anyone. So the question is, do you? If you want to protect your retirement with physical gold and silver, real assets, not paper promises, go to nextnewsgold.com and you'll find all the links and information. Josh, thank you for joining us. The Patriots, links in the description. We'll see you at the next show.